All right, everybody. Stocks by the numbers. Welcome back. Quick update here. I want to look at the three indices. I want to look at a couple of Dow components and just kind of show you guys how the trend lines look here with a couple of things. So we can see first the S&P come down, dancing around this trend line here. We could potentially bounce. We spoke about maybe the run up back to resistance here of about 5,500, but we ended up dropping downward. Now we're kind of dancing, holding around this trend line here. Potential break back to sub 5,200. And then, in my opinion, it really should come back down here, which would be about 4,900. So we'll see how that plays out. But you can see how we went up and up and up. Right? Up and up and up and up and up. And now we have to come down and down and down. So, again, I mentioned that it really doesn't matter whether we get good news or bad news. The problem is, again, we went up 50% under the last administration, which is just, in my opinion, ridiculous. So that's why I said, even if things are going well for the country, even if businesses are doing well, in my opinion, markets really have to come back down. But just wanted to show a couple of trend lines here. We can see the NASDAQ. We got the news that NVIDIA might have to pay, what they say, like $5.5 billion, right? So NASDAQ chunks down. Had a lot of tech drop on that news, but we can see today the NASDAQ ends up closing flat. The big loser was the Dow, down about 500 points, 1.33%. Came down here, retested this fib right here of about 18,204. So now you have to see if it wants to hold that fib and try to retest the 20-day, or if it's going to break this fib and then come back down here to the low 17,000s. In my opinion, I think it rejects and it comes down, but of course we know it's easier to react as opposed to predict. But just wanted to point out that fib. The Dow dropped down big. Yep, look, we ran up right to that trend line there, rejected, and started dropping, chunking down the last couple of days. We are still above this trend line here, but I do still think that we make lower lows, right? We had the big drop, little recovery, bigger drop, little recovery, bigger drop, little recovery, right? You understand? So that's why, in my opinion, I do think that the Dow drops back down to this fib right here of about 37.33 thousand. But if we immediately, if we go Monday, let's just say hypothetically we drop and we test this line Monday, you're looking at about 38,645, we'll call it. So that's roughly the level you have to keep an eye on. Then if it breaks there, you could potentially have some support right here. About 38,325, we'll call it. And then if that happens to break, you're coming to this fib. Or potentially, again, making lower lows. So I know everyone out there, as I said, oh, buy the dip, right? The second we chunk down, oh, buy the dip. And I said, remain patient. Remain patient. Because if you really think, after all of this, they're just going to drop it one day and then bounce it back and we're going to go back up here. Again, you may be slightly new to this. But in my opinion, again, I do think they really beat it up. I think it remains volatile. So tread lightly. And unless you've been watching a certain stock for a while and it is absolutely at what could be viewed as its quote-unquote lowest point, then in my opinion, again, if you're looking to buy some of these dips, I would slowly piece my way in. I wouldn't go too heavy, right? Because if markets remain volatile, we keep selling off now for the next 3-4 months, you're going to look back and you're going to say, see, I thought it was a good idea to buy that dip. I should have waited, blah, blah, blah. Right? You know what's going to happen. Yields up today, again, 10-year, about 4 1/3 even, 1.2%. 20-year up to 4.84%, up 1.25%. Again, I said, in my opinion, the 10-year, oh, my throat is killing me. The 10-year, excuse me, probably going to get up to, I'd say at least, I think it's going to get up to about 5.25, maybe even 5.5. The 20-year could potentially see 5.7 to 6%. So I'm very curious to see what happens with these yields. Because again, as we know, technically the theory is if yields keep going up, stocks keep going down. So have to keep an eye on that. Verizon and PM have, as you see, held up pretty well. Verizon recently bounced back to about 47. I did a couple of updates on the stock, and I remember speaking about it in Discord when they really beat it up, brought it down to the low 30s. And I said, if you have some time, if you could tuck this away for like a year or two, you know, this baby, even if it rebounds to 45, you know, you're going to make 50% on your principal investment while collecting a healthy dividend to own it. But you can see that these big dividend payers are the ones that are holding up kind of the most in this volatile market. And something like VZ, again, we had the big rebound. We're back here in the mid 40s. Stock paying out almost 6.25% dividend at this point. And in my opinion, I do think it gets back up to the high 40s and back above this support trend line here. And I think it gets back to 50 plus where it was. But, you know, slowly and surely. But overall, Verizon in the numbers could still be viewed as undervalued, and you have a very nice dividend. Something like Philip Morris, PM, I've spoken highly about this stock on multiple occasions. And I know it's not really on everyone's radar, right? It's like a boring kind of longer term hold. And a lot of people aren't interested in that. People want to take the couple of $1,000s that they have and they want to turn it into $500,000 tomorrow. Even though, again, I'm not knocking that strategy. But again, the bulk of your money, in my opinion, should really be into more things that are quote unquote sure things. Right? Like something like a Verizon on a dip. Again, Philip Morris, I spoke about the stock in the 80s and the low hundreds. You can see we were in this triangle I spoke about since 2017. And now you can see, look, the stock's up, off to the races. Again, even over here, if you bought back here at $100 a share, I mean, your principal investment's up 60% and you've been dripping, getting that dividend the entire time. Absolutely beautiful. But PM hits new highs, 165. Citigroup, price target 180. And the whole time we were looking at it back here, the stock was yielding like 5.5%, almost 6%, I think. And even as it's up 60%, still getting paid a nice 3 1/3% dividend. But technically, the stock may actually keep climbing. Because if you go back, well, not far enough. If we go back, we can see we are technically in what's known as uncharted waters. A level where the stock has never been. Which means that, again, something like Citi's 180 price target, I mean, the stock can keep going next week, right? Monday, Tuesday, Wednesday, and it could go straight up to 180. Maybe even higher before it cools down, starts to drop down. I spoke about the potential pullback here down into the apex of this triangle, but you can see we bounced off the fib, had big healthy days, getting it back up above the 20-day, and then they reported earnings and absolutely decimated earnings. So the stock had to jump up again and just really has been continuing to climb. But Philip Morris is the company that does the Zyn pouches. And as you know, the Zyn pouches have become extremely popular. And people always mention, oh, I wanted to try the Zyn, but, I went to the store and they were all sold out, right? Philip Morris, we did an update, I think, a while back of them talking about, I think they built a new facility, I think, to ramp up production of the Zyn pouches. But stock has really been performing very, very well. The earnings have been very solid. And again, you can see how, even on a day like today, with the Dow down, 500 points, this stock was able to jump up almost 3 points, hit new highs, go into uncharted waters, close green 1.7%. Because it's a defensive business, right? That's why I said I liked it as well. Whether the economy is good, bad, or ugly, if you're a smoker or if you're someone now who's, popping a couple of Zyn pouches a day, no matter what the economy's doing, no matter what unemployment is doing, right, you're going to go back to the store when you run out and you're going to buy more Zyn pouches, you're going to buy more cigarettes, yada, 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 e-cigs, whatever it is, right? They do it all. But we can look at stock charts real quick on PM. We can see really healthy bounce off the 50-day, ran up here, top Bollinger Band, hit that 165, drop down. RSI 65.25 on the daily, right? So you may again have another bump up just because the stock's in uncharted waters. It may actually open and make new highs and then possibly reject if RSI hits 70 plus. However, the recent run-up, we can see also the MACD just crossed back to the upside. However, last time that happened, you can see it was kind of short-lived for a couple of days, then we had a big drop. But in my opinion, again, technically, uncharted waters, it could keep going. Excuse me. On the weekly, RSI up here at 75.5. We have been overextended before. So right now, I'm not exactly sure if this is a technical play, really. This might just be pure fundamental. So that's why I think money is still flowing into something like PM, even as it goes up and continues to sit at highs. MACD on the weekly, looking good. Still on the up and up. We looked at the markets, VZ, PM. We'll look at oil real quick together. Oil. And we can see, wow, look at that. Stopping. Now it looks like it's slightly above this trend line here. You can see coming down from December 13, 24. Cutting across to those highs there. Touching the bottom bodies of those candles perfectly there. And you can see we had the flash break. And I mentioned that we were back in this downward channel. Right? And I mentioned that if we get up and close above these trend lines here, you're going to see the retracement back to the 20-day, and you're going to retest this key level here that was 67.5. Right now, you know, it's looking like maybe like 67.80. Oil up 2.8% right now, 63.68 a barrel. So again, even a jump up back to the moving average, almost about 65.5. So you have to keep an eye to see if it closes above this range here, which looks like about 63.57. So it does look like it's still bullish. And going into next week, I know markets are closed tomorrow. Happy Easter. But going into next week, USO calls may be in play, in my opinion. Checking out the dollar here. The dollar recently chunked down below support. So yeah, this was going back to the lows June of 21, cutting up to those recent lows there, September, end of September 24. And you can see we chunked it down. Now we're below that level. So chances are we're going to potentially pull back to about 97.33. I'm sorry, excuse me. I keep choking. I don't know. My throat is like dry. But about 97.33 potentially on the DXY. And then, of course, if we really drop and break down, going back to the bottom of 08, across to 2011, I mean, you can see if this happens over the next couple of months, DXY down to about 84. Technically, that wouldn't be good. However, they say as the dollar goes down, stocks go up. So, again, like, you know, it's going to be crappy for us, but at the same time, stocks might go up. So, like, it might be all right. I don't know. In my opinion, I don't think any of this is a good sign. I do think that we come down to about 97.5. And again, even Donald Trump said, he said, listen, I'm going to do a couple of things. You know, we're going to throw around some ideas. We're going to sign some policies. I'm going to sign some orders. And it's going to get worse before it gets better. You know, it's going to be rocky here in the short term, in the intermediate. But, you know, in the long term, everything should pay off. Everything should be fine. And that's why, again, I spoke about potentially the first at least like 6 to 12 months of this administration is probably going to be like a downward sell-off consolidation market. And then everything's going to start rocking and rolling. So in the short term, again, on DXY, look for about 97.5. Look for that bounce. You can see, again, look, we spiked up, popped up, and then had to retest to break up above that level. And you can see that's about, yeah, like 97.4. And you can see, again, that's kind of, that's a key level. That's a trend line, right? So that, in my opinion, is what I would keep an eye on. What else did I want to talk about? Oh, yeah, Netflix. We'll do a quick earnings update. Netflix. Loading. Wow. There we go. Netflix. So again, you can go back to the channel. That, yeah, this was wild. Mid 22, did a video down here, like 170, 160, and we were looking at the chart saying, yeah, we could potentially go down to 140, you know, but if you wanted to start building a position, we were looking at the big gap downs and how valuable the stock was and how much they beat it up down here. And I said, in my opinion, you know, you buy this big dip, start to piece your way in, and if the company, you know, is able to come back and start beating earnings, it can easily fill the gaps and chunk back up to 500, 600, no problem. And again, as it was kind of on this surge and it got back to where it was, I believe that was when like that password crackdown started and they didn't let you like share the account with everybody, right? So they made everyone get their own account and pay their own way. And analysts were speculating like, oh yeah, Netflix, you know, that's going to suck. The business is going to take a hit. And the exact opposite happened, right? Revenue consistently comes in above estimates. And we can see, again, we're going back several quarters, but you can see really nice beats here on both the top and the bottom line. And again, estimates jump up to high 9 billions. The company reports 982. And here again, estimates jump up above 10. They post 10.25 billion. And now we can see here, estimates jumped up to 10.5 billion, and the company just reported 10.54 billion. And again, more profitable than Wall Street expected. They were looking for 567 a share. The company posts 661 a share. So Netflix rolling on all cylinders, back to $1,000 a share now. So obviously that was a massive return. And again, you can say, oh yeah, but look how long it took. Right, fair enough. But as I've been saying on this channel, if you accumulate a chunk of change, right, if you know where to park it, and you're able to give it time, look what happens. And I have shown this time and time and time again on this channel, right? So again, you know, was it slow? Was it boring? Did it take, whatever, 2 years, 2.5 years? Yeah. But also at the same time, you know, week in and week out, everyone you knew was trying to flip options, and 1 week we're up, 1 week we're down. Oh, we're up. Oh, market's just tanked. I just lost everything. Now I'm in rebuild mode, right? But meanwhile, you bought, quote unquote, a secure, high conviction investment at an undervalued, beaten up price. And now you turn around a couple of years later, you're up 700-800%. Right? So again, you know, is it boring? Yes. You know, is it unbelievably exciting week in and week out? You know, it depends on the pops and the news that comes in, of course, but you see my point, right? You see my point. Proved it again. Something like Philip Morris, up beautifully. Something like Verizon, again, they beat it up. Fine, no problem. I'll start to take a position. I'll collect my dividend. Give this baby a year or so. I'm going to be up huge. Something like Netflix. You're up here, bang, you're down here. Boom, I'm going to start piecing my way in. Business rebounds, everything's fine. Again, even if you sold it back to where it started at 600. Right? 1.5, 180 a share. You sell at 600. Like, come on. These gains are beautiful. But after hours, you can see the stock jumps up to almost 1025, flattens out, has a drop, consolidating here. Again, really nice beat. Let's see if we can pull up the report real quick. Unscathed by tariffs. Yes, this shouldn't be affected by tariffs. Netflix's winning streak continues. Record profit in the first quarter, beat its forecast, including revenue, operating margin. Streamer, home to hits as adolescents, blah, blah, blah. Said it's been largely unscathed by recent concerns about the health of the economy in light of the Trump administration's trade policies. Executives said they have not seen signs of advertising softness and that subscriber engagement remains strong. While many companies are bracing for impact, Netflix has been somewhat protected. Families cut back on major entertainment expenses outside their homes. Analysts say they tend to keep subscriptions such as Netflix that can offer in-home TV and movie viewing. Quote, historically, in tougher economies, home entertainment value is really important to consumer households. Executives said the company had not seen significant changes in the plans subscribers choose. So again, what we're seeing here, first of all, this is a type of business that isn't really affected by tariffs, as they say. But also on the flip side, what we're seeing the last couple of years is the move away from traditional entertainment, things like cable TV, and people are ramping up their streaming subscriptions. So something like Netflix, yeah, right now, should technically hold on fine, right? It should remain stable, in theory, anyway. Netflix shares have risen about 58% over the last 12 months. The company has expanded its lead as the dominant streamer and has continued to broaden its offerings, including live sports, content from YouTube stars, and games. Sarandos also raised the possibility of the platform featuring video podcasts. This is the first quarter in which the streaming giant didn't disclose a quarterly subscriber number and average revenue per member. The change, the company has said, focuses Wall Street more on revenue and profits. It said revenue growth during the period was driven in part by membership growth. Okay, I do remember them saying they weren't going to give those numbers anymore. I guess you can say they kind of passed that point, right? So now we're looking at the overall picture from quarter to quarter, as opposed to kind of micromanaging, like, oh, you know, this went up, this went down, which incidentally is funny, right? If you compare it to something like a Fubo that's on the up and coming, right? They're looked at differently on Wall Street now. So you can see why, again, Netflix has gotten to that point, but also Fubo, I like Fubo. And now, again, if we're talking about them and Hulu, then yeah, over time, hopefully Fubo can get to this point as well. But of course, that's going to take a couple of years. The company reported $10.5 billion in revenue first quarter, up 12.5% year over year. Net income rose about 24% to $2.9 billion. Forecast $2.4 billion. Netflix expects stronger revenue growth in the second quarter from recent price increases, continued membership growth, fresh advertising revenue. Executives have told staff that they aim to double revenue to about $80 billion by 2030 and increase global ad sales to about $9 billion. Netflix estimated that the service has a global audience of more than 700 million people, two-thirds of whom live outside the U.S., ended the fourth quarter with 301.6 million subscribers. January, Netflix raised U.S. plans, ad-supported tier to $7.99, premium tier to $24.99. Okay. Operating margin 31.7%, was 28.1%, very nice. Predicted 28.2%, wow. Free cash flow rose 25% to $2.7 billion during the period. Its revenue and profit growth outlook remained solid. Netflix did not change forecasts. But again, just business as usual for Netflix. And again, we know it's all a prediction, but those analysts that said, oh, you know, raising prices and forcing people to open their own accounts, right, as opposed to sharing with friends and family, that might hinder the stock's performance, your business might suffer. And it was the exact opposite, right? People view it as a valuable investment, something worth holding, worth paying for. And again, even the lower tier, whatever, $8 a month. Again, you compare that with something like a cable bill. You know, you and I both know that's why over the last couple of years, people said, you know what, forget cable, let me buy Hulu. Let me do the, you know, Amazon Fire Stick. Let me do Netflix, right? It's just easier. But that's pretty much all I wanted to talk. We talked about the three indices. I mentioned yields. We looked at the dollar. We looked at oil. I wanted to mention PM. I wanted to mention Verizon and Netflix numbers. Yeah. So that's, well, let's check stock charts real quick for Netflix. Why not? Then I'll let you go. Okay, on the weekly, 1047, top Bollinger Band, so it might just retrace and get back to those highs it was back when the ball dropped. Came right down to the bottom and bounced nicely. Look at that, just, you know, slow and steady wins the race, right? That's what I always say. And look at that, just kind of like the tight railroad track channel on the up and up, just up and up and up. Absolutely beautiful. But on the weekly, RSI 58, right? So again, over the longer term time frame, we still have room to the upside. So that's why I think, yeah, maybe like 1040, maybe 1050, slightly touch. Oh no, highs were 1064. Well, you never know. We'll see what happens. RSI 58. Check the daily. So we jumped up here. Top Bollinger Band 1012. 87. 1012. 10, 12. Yeah, so that's like right there. And we tightened up at about 10.16-ish. We broke, got back up to 10.05. 10.05. Okay, so it might just hover around the low thousands, actually. RSI sitting here at about 56, right? We know it's up now. MACD recently crossed to the upside. Yeah, I don't know. I mean, it technically should really continue to climb. But again, as I mentioned, a lot of these stocks are on the up and up over the last several years. So now if we're going to kind of start slowly bringing everything back down to earth, I'm sure you can make the argument now that Netflix, as we saw, went from a few hundred to $1,000. So it could be viewed as overvalued. So you might have a lot of people seeing that $1,000 mark and saying, oh, I bought it at 400 or 500. Now it's at 1,000. Bang, I'm going to take the money and run. Right? So you might have a lot of profit taken here, but on the weekly, again, we could potentially retest the top bands of the high 1040s, potentially 1050. So we'll see what happens there, but congratulations to you shareholders. That was basically the, biggest brand name stock that just reported earnings, so I figured I'd mention it, but I'll end it there. So once again, Stocks by the Numbers, I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That's how you help me, help you. But of course, more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Happy holidays. Enjoy your weekend.